Oil prices high this week and the dollar weakens as concerns rise due to COVID-19. And Wall Street's biggest markets on the rise as traders await further details of Biden's plan. Good afternoon and welcome to Economy News. Oil prices edged higher, lifted by a weak dollar and signals from Chinese import data. Brent crude oil futures rose 36 cents or 0.6% to settle at $56.42 a barrel. U.S. crude ended 66 cents or 1.3% higher at $53.57. More on the following report with Basma Al-Awadi.
Oil prices edged higher earlier this week, boosted by a weak dollar and optimistic signals from Chinese import data, but pressured by renewed worries about global oil demand due to surging COVID-19 cases in Europe and new lockdowns in China. Brent crude oil futures rose 36 cents, 0.6% to settle at $56.42 a barrel. U.S. West Texas Intermediate ended at 66 cents, 1.3% higher at $53.57 a barrel. The U.S. dollar index slumped after U.S. Federal Reserve Chair Jerome Powell stated that the U.S. Central Bank is not raising interest rates anytime soon. Raising hopes of increased oil demand was a hefty U.S. COVID-19 relief package, which President-elect Joe Biden is due to unveil earlier this week. And accordingly, world stocks indexes climbed to record levels and U.S. bond yields edged higher this week as investors focused on Biden's pandemic aid proposal.
Asian shares dropped lower in afternoon trade earlier this week, reversing earlier gains as COVID-19 cases in China reinforced investor concerns over the prospects for a global economic recovery. Meanwhile, MSCI's broadest index of Asia-Pacific shares outside Japan was last down 0.59%, and Hong Kong's Hang Seng fell 0.29%. Australia's ASX 200 was flat earlier this week, while Japan's Nikkei lost 0.65% after touching three-decade highs in the previous session. A proposed $1.9 trillion COVID-19 relief stimulus package from President-elect Joe Biden may prove to be a double-edged sword for investors, sustaining optimism for further economic revival while raising worries over how the United States will pay for it all. The stimulus package unveiled by Biden this week has been widely anticipated by Wall Street and has helped lift the broad S&P 500 index nearly 3% in the week since Democratic challengers won both of Georgia's U.S. Senate seats, giving Democrats full control of Congress. Those moves, however, have been mirrored by a slide in treasuries, due in part to expectations that the government will need to fund the spending with more debt issuance. And finally, Britain's economy shrank by 2.6% in November, the first monthly fall in output since the country was under its initial COVID-19 lockdown last April, as new restrictions were imposed to slow the spread of the disease. Britain's economy is now 8.5% smaller than it was before the start of the COVID-19 pandemic in February. The Bank of England previously estimated Britain's economy would shrink by slightly more than 1% over the final 3 months of 2020. And that's all with economy. Now we move to the sports news with Sundus Al Faraj.